Assalamu alaikum. Have a good day. Welcome to Financial Management eLearning. We are going to discuss cost accounting. We are in domain cost accumulation system. Today we will discuss module 14. And today we will discuss objective of cost accumulation periodic versus perpetual, cost accumulation actual versus standard, periodic and perpetual cost accounting system, the factory ledger. So cost accumulation involves the use of formal cost accounting system to collect cost information. By collecting and analyzing cost information, management can make more informed decisions about the operation of business. Cost accumulation systems fall into two main categories, which are job cost system and process system. In job cost system, accumulates materials, labor, and overhead costs about individual jobs. Process system accumulates by cost center and then assign diverse costs to products. Cost accumulation, a collection of cost and data in an organized manner. If you see here is the cost accumulation in a manufacturing company. Look here, material inventory, work in progress, finished goods inventory, all within the balance sheet, and cost of goods sold within the income statement, and cost accumulation system. If you see here, cost accumulation, cost assigned to the cost object, departmental or activities or product. Here a machine department's activities, finished goods department activities, both are the operational department, and it's all goes to the base on the products. So cost accumulation, the process of collecting data, cost as a product progress through the production system, enabling the total cost of manufacture to be built up in a sequential fashion. So objective of cost accumulation of a cost data for control purpose, to have the minimum possible cost concise with maintenance of quality. Cost accumulation refers to the recognition and recording of costs. Source document can be designed to supply information that can be used for multiple purposes. And cost accumulation as the partially finished goods move through the factory, the total value of this goods continues to increase because more work and overhead are being used on them. So collection of costs in an organized fashion by means of the cost accounting system. And there are two primary approaches of cost accumulation: job order and process. So under the job order system, the three basic elements of manufacturing cost, that means a direct material, direct labor, and factory overhead, are accumulated according to assigned job number. And under the process cost system, manufacturing costs are accumulated according to processing department or cost center. Look here is the relationship of cost accumulation, cost measurement, and cost assignment. So look here, this is the left side. Cost accumulation is this means a record of cost, that will purchase material, assemble apparel, finished apparel, depreciation, utility, profit tax, land rate, etc. And cost measurement, that is classifying cost is direct material, direct labor or overhead, and cost assignment assigned to the cost object within the product. So it is the look this is the relationship between cost accumulation, cost measurement, and cost assignment. I think it is clear to you. So now cost accumulation method, if we see, it refers to the manner in which costs are collected and identifying the customers, job, batch, order, departments, and process. So a method that is direct costing. We have also job process, activity, and concept. We see the absorption or direct. So look here, it is the cost-based pricing. If we see that a product, cost, price, value, and goes to the customers. And here value-based pricing would be customer, cost, price, cost, and product. This is totally reverse here. So 5 parts of cost accounting system we know is the input measurement basis, inventory valuation method, cost accumulation method, a cost flow assumption, and recording interval capacity. For example, input measurement basis that can be pure historical, normal historical, or standard. And inventory valuation method, it can be fully observed, activity based, direct or variable through output. And cost accumulation method, job order, process, backflash, hybrid. And cost flow assumption is specific identification, FIFO, weighted average cost of weighted average, and recording interval capacities, perpetual or periodic. This is the 5 parts of cost accounting systems. And look here, actual cost that may known. Actual cost after the fact may not be useful for planning and decision making. And estimated cost, managers are estimated cost to make a decision about the future. So type of cost used for that means look here for the costing system. Actual costing is direct costing would be actual cost, labor would be actual cost, and factory overhead also would be actual cost. And normal costing, here direct material use, actual costing, labor use, actual costing, but factory overhead, here use applied overhead cost. And standard costing, all element of cost, that means material, labor, overhead, all are standard cost. So normal costing, if we see, is a value manufacture products with the actual material cost, the actual direct labor cost, and manufacturing overhead based on a predetermined manufacturing overhead rate. These 3 costs are referred to as the product cost and used for the cost of the goods sold and to inventory valuation. So now cost accumulation method, we say here a job order. We will discuss this job order costing in our next module, but here is a short brief is that job order costing, costs are accumulated by job, costs are accumulated by jobs, order, contract, or lots. The key is that the work is down to the customer's specification. As a result, each job terrains to be different. For example, job order costing is used for construction project, government contract, shipbuilding, automobile repair, job printing, textbook, toys, wood furniture, office machine, etc., etc. Also, we can say professional service, that means lawyers, doctors, CA, CMS also fall into that category. So look here, job costing here, material, labor, or overhead is caused to separate jobs, and that separate jobs within the finished goods separate item. That means here, look here, the separate item. So here in this job order costing, the physical flow would be material, production, finished goods, and delivery customer. Cash flow, that means material inventory, work in progress, direct labor, manufacturing overhead, and finished goods inventory, and goes to the cost of goods sold. And same way, if we see The process costing, discuss process costing later on with my another module. That would be the last chapter of this syllabus. So in process costing, costs are accumulated by departments, operations, or process. The work performed on each unit is standardized or uniform, where a continuous mass production or assembly operation is involved. So look, here is the process costing. This material, labor, overhead, and also goes to the work in progress of 3 item, and here finished goods is here. So it is the 1 item here, but the job is separately. So if we see the cost flow of process costing, material inventory is it goes to the material inventory, it goes to the direct material inventory department A, B, or C, and also the indirect material is goes to the overhead and payroll, overhead, etc. comes to the total work in progress, and then finished goods, and later on cost of goods sold. Now, backflows accounting is a cost accounting system which focuses on the output of an organization and then works backward to attribute cost to stock and cost of sales. So backflows costing describes a costing system that delays the record sum or all of the journal entries relating to the cycle from purchase of direct materials to the sale of finished goods. Hybrid or mixed systems are used in situations where more than one or more accumulated method is required. For example, in some cases, process costing is used for direct material and job order costing is used for conversion cost. So direct labor and factory overhead is the conversion cost. And in other cases, job order costing must be used for direct material and process costing for conversion cost. The different department or operation within a company might require different cost accumulation method. For this reason, hybrid or mixed cost accumulation method are sometimes referred to as the operational costing method. I think it's clear to you. Now, cost accumulation, periodic versus perpetual. Look here, periodic cost accumulation system. First step, a periodic cost accumulation system is to understand the flow of cost of goods passed through the various stages of production. The flow of cost in a manufacturing company under a periodic cost accumulation system is shown, and the cost of goods input and into the production, direct material, labor factor were put to the cost of work in progress. So look here, periodic inventory accounting it with that, beginning inventory plus net purchase, then we'll get a cost of goods and is available for sale minus ending inventory, then we'll get cost of goods sold. So inventory is not tracked in the accounting system continuously. Beginning inventory balance is carried until the end in the period. Purchases are accumulated during the period. Ending inventory balance replace the beginning inventory balance. So it is the periodic cost of system. Periodic cost system is the cost of goods manufactured plus beginning finished goods inventory equals the cost of goods available. Direct goes to the cost of goods sold, and indirect goes to the indirect goes to the factory overhead. Direct is the direct material and direct labor, and factory overhead comes your cost of goods input into production plus a beginning work in progress inventory minus the cost of goods in process during the period minus the ending work in progress inventory minus cost of goods manufactured plus beginning finished goods inventory minus cost of goods available for sale minus ending finished goods inventory then minus cost of goods sold plus selling additional and administrative expense equal to total cost. Perpetual cost accumulation system, that means perpetual inventory. This is the system involves the maintenance of details inventory record in the accounting system, and continuous record is maintained on a transaction by transaction basis throughout the period. So perpetual cost accumulation system are designed to provide relevant information to management on a timely basis to aid in planning and control decision. Okay. Look here as the example overhead terms, indirect labor, it's debit factory overhead, credit salaries payable, indirect material, debit factory overhead, credit inventory suppliers, factory insurance, factory overhead is debit and prepaid insurance is credit. That means factory depreciation and a factory overhead is debit and accumulated depreciation for factory is credit, and a tax utility factory overhead debit, tax utility or utility payable credit. So look, here is the example: material cost direct, indirect total 80,000, labor cost direct 18, indirect 17, total 35,000, other indirect manufacturing cost, power and heat 30,000, power and heat 10,000, and inventory and Taka beginning work in progress 2,000, finished goods 15,000, and ending work in progress 8,000, finished goods 20,000. Based on this data, if we put here the periodic cost accumulation system, if we put all data here, then we will get here cost of goods input, that total cost of 1,44,000, and just do it in your kata. Okay, and cost accumulation approach, look here: manufacturing cost, direct material, labor and overhead, actual costing system, direct material we are putting in actual, direct labor actual, overhead actual, and normal costing system, actual direct material, direct labor actual, and budgeted overhead, and a standard costing system. All are the standard. So this figure, if we put in our perpetual cost accumulation system, then total cost would be here. Look here, total cost of operation 1,44,000. Okay, so one example, that is problem 71, cost accumulation. For cost accumulation, for a manufacturing company uses Java cost accounting system and it keeps perpetual inventory record. That means perpetual inventory record. Prepare journal entries to record the following transaction in the October 2020. Purchase raw material 25,000, raw material requisition by production, direct 6,000, indirect 1,000, paid factory utilities 2,100, repair factory equipment 3,000, incurred 72,000 of factory labor, time tickets indirect, the following direct labor 4,000 hour multiplied by 12 per hour 48,000, indirect labor 3,000 multiplied by 8 per hour, that means 24,000, total 72,000. Applied manufacturing overhead to production based on the predetermined overhead rate of Taka 9 per direct labor hour worked. And goods costing 18,000 were completed in the factory and were transferred to finished goods. And goods costing 15,000 were sold for 25 on account. So if we prepare a journal, we know is the debit amount, is credit amount. So 1st of October, purchase of raw material 25,000, his journal would be raw materials inventory 25,000 and accounts payable 25,000. That means purchase of raw materials on accounts. And 8, raw materials requisite to production, direct and indirect. So look here, work in progress inventory is the direct material 6,000, manufacturing overhead 1,000, so raw material inventory 7,000 credit to record material use. And the 15, paid factory utilities 2,100 and repair of factory equipment 3,000. It's come here, manufacturing overhead 5,100 because adding both figure 2,100 and 3,000. So manufacturing overhead 5,100 and cash 5,100 to record payment of factory utility and repair. Same way factory labor 72,000, that means incurred 72,000 factory labor. So factory labor 72,000, factory wages payable 72,000 to record factory labor costs. Indicate the following: direct labor and indirect labor, total 72,000. So look here, work in progress inventory 48,000 and manufacturing overhead 24,000. So factory labor that we do here in the debit is now is the credit factory. Then in 25, applied manufacturing overhead to production based on the predetermined overhead rate of taka 9 per direct labor hour work. So in 25, work in progress inventory 36,000, manufacturing overhead 36,000, and multiply by 4,000. And finished goods inventory 18,000, work in progress inventory 18,000. So and in the 30, goods cost 15,000 are sold, 25,000 account. So here accounts receivable 25, cost of goods sold 15, and sell 25, finished goods inventory 15. So we have recorded through the journal that. So same way if we do another one, cost accumulation. Look here, the gross earnings of factory per Muttakin company during the month of January in 1 lakh. The employees payroll tax for the factory payroll are 12,000. Of the total accumulated cost of factory labor, 75,000 is related to direct labor and 25% is attributable to direct labor. So prepare the entry of the record factory labor cost and entry of the assigned factory labor production, etc. We have to, and also have to prepare assigned manufacturing overhead to production, assuming the predetermined overhead rate is 125% of direct labor cost. Factory labor 1 lakh 12,000, so 1 lakh plus 12,000 here. Factory wages payable 1 lakh and payroll tax 12,000. Okay. Then B, work in progress inventory 84,000, manufacturing overhead 28,000. 75% is related to direct labor and 25 indirect labor. So this is the 75%, that means work in progress inventory 84,000 and 25%, that means 28,000. Total 1,12,000 is the factory labor. I think it's clear to you. And then work in progress inventory 1,05,000. So 125% of 84,000 will get 1,05,000. So work in progress inventory 1,05,000 and the manufacturing overhead 1,05,000. So it's the part 1 of this video. So what we discussed today, cost accumulation and cost accumulation system fall into 2 main categories: job cost system, process system. And we know cost accumulation is a collection of cost data in an organized manner, and we have seen here objective of cost accumulation. Also we have seen the relationship of cost accumulation, cost measurement and cost assignment, cost accumulation method we have seen here, and the 5 parts of cost accounting system, and actual cost, estimated cost, normal cost, job order costing, and also process costing, and backflush costing, mixed or hybrid costing, and cost accumulation, periodic versus perpetual. we have seen an example here. Solve the cost accumulation problem 1 and 2. It's all for today. We'll meet with you again with this same domain, cost accumulation, with my second part. So till then, take care. Allah Hafiz.